It's Pat. I just
What we're going to
joined.
do, I tell you a little bit about our nonprofit organization, who we are, just a couple of minutes, and who I am, who we work with. And after that, what services we provide. And one of the services is forbearance. So I explain you a little bit what forbearance is and what is the exit strategies for the homeowners from the forbearance. I'll show you examples of workout that has been done by us for people who are exiting from the forbearance right now and receiving loan modification, and also for people who are having the negative equity in the house or could be eligible for the short sale according to the lender, and how it can work for you. So because it's not a lot of inventory on the market, there is a program that your homeowners can stay in the property. We can do the short sale to nonprofit and keep the homeowners in the property, and you get paid as a real estate agents your short sale fees. So just I'll explain all this in details, and I'm going to give you the presentation. If you have questions, please do not hesitate to ask. I will try to not give you too much information. Okay. So, but you will have opportunity to read presentations at your leisure, so later. Okay. All right, we'll go. Nonprofit organization. We're a neighborhood assistance consulting agency. We're local Minnesota nonprofit organization. We have been here for 11 years. And we work with homeowners who cannot afford to pay existing mortgage due to any reason. They have loss of jobs or income, reduction of income. They have medical events, divorce. They have any other disaster like COVID or something else happens. And these people do not qualify. They do not qualify for any refinance or financing. So it doesn't matter if they had a bankruptcy, it doesn't matter if they had foreclosure, it doesn't matter if they had accepted forbearance or their credit score is impacted. It doesn't matter. We're going to work with these homeowners. So there's whoever cannot finance or refinance traditional way, this is our clients. Okay. What we see sometimes, people being consigners for the homeowners who accepted forbearance, and they apply to reduce, to refinance right now, and getting the feedback that they cannot refinance because the person who they consigned for accepted forbearance, and they're not out of the forbearance yet. So this is all fixable, and a lot of mortgage brokers do know how to fix it. We also can provide information with documents to put together and send to the lenders. So we work with existing lenders, and we also offer alternative workouts that I'm going to explain that might benefit you. How the homeowners find about us. We work with the business professionals. This is how it's just come together for this 11 years. We receive the referrals from the mortgage loan professionals, real estate agents, from the attorneys, special divorce attorneys, small business real estate attorneys, credit repair guys, financial advisors, other people in the industry, and of course our clients. But sometimes you can get a phone call like that. Ina, do you remember you helped me like a couple of years ago? I don't remember everybody, I apologize, but I would like to send you a friend. But please do not tell the friend that you helped me before. Do not tell them that I had a hardship. So this is kind of the market we're working in, and it's totally fine. So when everything is confidential. So as I said, I'm foreclosure counselor, and I'm certified for NeighborWorks of America. And what do we do? This is foreclosure process in Minnesota. So do you familiar with this or not? Okay. So practically, if you miss the payment, and you get default, you get a notice of default, and you are ready in about 30 to 45 days, you get in foreclosure. So you can miss 3 payments in a row. After the 90 days, lender would not accept your payments. After the 30 days, they would send you notice of default. After 30 to 45 days, you will receive the foreclosure notification from the foreclosure attorneys on behalf of the lender. And another 30 days to 40 days, you have a foreclosure sale. After foreclosure sale, the homeowners can stay in the property for 6 months without making any mortgage payments, and nobody can evict them. Okay, so this is why in Minnesota, nobody buying property. I mean, 99.9% nobody buys the property at the foreclosure sale, because practically if you bought the property, you have to pay taxes, insurance for 6 months, and you don't know if the homeowner will be able to redeem the property, which is they have a right during the redemption period to find financing and redeem the property. And after the 6 months, you have eviction process in about 30 to 40 days. You will send eviction notification, and you go to the court or may not go to the court, and you be evicted if you don't appeal that in 30 days. So you have to leave the property. That is foreclosure process, and I'll explain it to you different ways, different options at the different foreclosure process stage in Minnesota, how we work with the homeowners. Okay, we work with each homeowners for 11 years. I did not see a single homeowner that would have similar the workouts, because it's based on the lender, it's based on what lender investor options are available, it's based on the property, what is LTV, it's based on the personal financial circumstances of the homeowner. And what are the goals? They would like to stay in the property, they would like to leave the property. What are the goals? This is our services. We do budgeting, loan modification, forbearance, note assumption and loan modification for surviving spouses, second mortgage and lien settlements, discount payoff or short sale without arm's length transaction, and new primary residence purchase for homeowners in foreclosure. Let's talk about forbearance. Forbearance is very simple. You probably heard a lot about forbearance. It's agreement between the homeowner and lender to stop making payments for a certain amount of time. And after that time, you have to catch up on the mortgage payment. And you have options how to exit from the forbearance. The type of the forbearances could be different. It could be a full moratorium on the payments. So they may not have to pay any payments. They may have a reduced payments. And it depends on the mortgage, what they have. They may have or interest-only payments. For example, they pay principal and interest, and for a while they pay an interest-only payments, right? If they have even cannot afford that, they may pay less than they paid before. So, for example, in the state of Minnesota, there are also some programs where for unemployment people or covered, when they do this, Wells Fargo would charge $45 per mortgage payment so that people can not to make full mortgage payment and avoid the foreclosures. For the 8 months, the gentleman was paying $45 until he was able to complete his new training and find a new job. Then he was come back to the loan modification process, and instead $1,500, his payment was reduced to $885 with the property tax insurance. So the different options are available, and that is what means. So lender can offer you option, and what option it offers that you have to work with the lender. Reduce interest rate, they can lower interest rate. They can say, remember those adjustable rate mortgages, they can reduce the interest rate for maybe a couple of years, 5 years, and after that it's come back to the previous one. It depends on the lender, or split mortgage. Some people cannot afford to pay the full mortgage. They would split it, and like FHA would do the claim. So for example, I'll give you an example of that later. When they practically put part of the mortgage into the hold without any interest, but when the person would refinance or sell the property, they would have to pay it off, that part of the mortgage on hold from their sales proceedings.
And it's financial.
Yes.
So under forbearance, we had a client who had been in forbearance forbearance, and now they want to sell their property and purchase another one, does that forbearance weigh negatively on their mortgage
Credit report?
application, their credit report, so that it might inhibit them from being able to get a mortgage?
This is if they accepted forbearance during the forbearance period because of the COVID circumstances, it should not be even reported on their credit report that they accept they're late with the payments. Okay, if they were late with the payments 3 months prior, let's say February or March 2020, right? And then it would be continued to report their late payments during the forbearance. So depends where they started to, why they accepted forbearance, okay? That's number one. Number two, we see some underwriters, they would be open to approve the new mortgage, even if people already accepted forbearance. But I would suggest that people exit from the forbearance. Usually underwriter would like to see at least 2 months regular payments on the existing mortgage before they approve them for something else. Yeah. Yeah. Okay, COVID hardship forbearance applies. They're just very simple. I just wanna, I don't want you to read all this, but based on what kind of mortgage it is. When people come to us, we wanna see if it's FHA, if it's a Fannie Mae, if that is the YSDA, who is investor, and when did they accept it forbearance? So this is what she said, it could be total of 360 days of forbearance. You need to watch that for the Fannie Mae loans and Freddie Mac, initial forbearance has been accepted before February 28, 2021. Because this year they extended forbearances, remember that 28 and after that for June. Now it's through September 30th of 2021. It's still a moratorium on the foreclosures, and the lenders do offer their forbearances. They can't foreclose, they can't take the payment. So they kind of like, no forbearance, your forbearance expired, but we're not foreclosing on you until the end of September 30th. And what we see for the last 11 years, every holidays, starting from Thanksgiving through the Christmas, usually there is no foreclosures, it's moratorium on the foreclosures. And the question is today, if they're going to connect those two moratoriums, and from the, September 30th, they will extend it for the end of December, we don't know. Nobody knows that. But this is how they did it last year. They did it like 2 months, 3 months, and to the end of the year, just let you know. But when, so if it's HUD, FHA, USDA, VA, we need to see that initial forbearance was before June 30th of 2020. If they accepted forbearance, are they eligible to extend that forbearance? So what good to know about forbearance? Practically everything that we already talk about this a little bit. So when people in forbearance, they had to accept forbearance starting February, March 2020. They had a legitimate hardship. They had a loss of business. Many Minnesota self-employees received the letters from the Minnesota state saying that they cannot conduct any businesses like facials, I don't know, just name it. So whatever service were it, they couldn't conduct any businesses. This is all people who were eligible for PPP loans. So they were eligible for the forbearances so that they can help themselves to go through this period of time. Forbearance is not an automatic thing. You have to contact your servicer to see what options and forbearance are eligible for you. I did hear different things about that, but it's what it's supposed to be. I'm just telling you what's supposed to be. Let's do this. What is the risk for the homeowners? I have to tell you, I see homeowners who are hiding, and not all of them recovered or find the new jobs. They a little bit in denial what's going on. The huge risk for these homeowners that they do not plan how to exit from this situation. A lot of, not a lot, but some of the homeowners would have the theory that they don't have to pay back. Okay, how to exit from the forbearance? We had the homeowners who came to us last year on the 20th. They sent by their mortgage brokers, and they will just ask us what to do. Honestly, last year we were advised them to just stay in forbearance and enjoy their life. So this year, when they started to pick up the jobs, self-employed, or the open new self-employed adventure, etc., how much money they make is important. What they're going to qualify for at the lender side. So repayment plan is very simple. This is example of repayment plan. If your mortgage payment was $1,000, you missed 3 mortgage payments. That means 3,000 divided on 12 months. The new mortgage payment for next 12 months will be $1,250. If you missed 12 months payment, you can imagine how much more you have to pay every month before you catch up on that. Okay, so not everybody can afford it. These repayment plans right away, just let you know. Option 2 is the payment deferral. The payment deferral could be, people can continue make their mortgage payments, $1,000. They practically would take $3,000 and put at the end of the loan. They recalculate the loan balance with the new interest rate and just might even a little bit keep the same interest rate, or they can just put aside until you sell the property or refinance, that you can pay off that $3,000 of the forbearance amount that's remained for the time of the loan. That $3,000 doesn't have any interest occur for the time of the loan, just let you know. Loan modification. Yep.
So if it's interest free, that 3,000, is that strictly because of COVID, or is that typical outside of?
Because of COVID.
Okay.
Yep.
This is the current state. Okay.
For everything that
there would be some level of interest on that if you defer it.
I saw for 11 years, I saw different workouts. Sometimes FHA especially would practice separate claim, and they would not, even if it's not was not covered, they would not charge the interest. But it's a individual decision on individual mortgage. Gotcha. So just let you know. Yeah. Loan modification. Okay. They cannot afford current payment. They cannot pay even $1,000. They have a different job, that they have a different self-employed income that proved by the bank statements and other documentation. They can qualify for the loan modification. What does it mean? Whatever delinquent amount is, of course, they put on the back of the loan, and they recalculate entire amount of remaining mortgage with a new interest rate. Usually they go by ABC, lower the interest rate. If it's negative, there is a negative equity in the property, they might remove or forgive negative equity in the property. If it's not, they skip in that option, or they can do the extend the mortgage terms to 40 years. And actually, sometimes it's more beneficial than 30 years. And I'll show you an example. Plan your existing mortgage. Option 4. I heard from a lot of people, and sometimes reading on their website, you should not pay lump sum. You know, a lender should not request to pay very large lump sums that people all the missed payments. Is it always the case? I don't think so, because every lender goes by their own rules and can go under the same rule, that blanket rule that we read on the internet. So practically a lump sum could be a very good option if somebody missed that many payments. And okay, $1,000, 3 months, that's $3,000. So the 4th month they're paying $4,000 and coming back to $1,000 per month. So they had some money, they come up with that, and so they didn't have to do anything else. So the options offered by lender, they base what investors or lenders or servicer, they have a plan. They have contracts with the investors. They also based on borrowers' individual and financial circumstances. Like I said, for 11 years, I didn't see a single two workouts similar to each other. This is example. So much easier to remember. So this is practically, this was couple of accepted COVID-19, and they had $25,677 outstanding mortgage payments. Original mortgage balance was $400,000, and all monthly mortgage payment was $2,334. Interest was 3.75%. Remaining mortgage terms were 29 years, and appraisal value on the subject property come back at $478,000, so which is about 83% LTV. Husband works W-2. With the wife, she called me at the end of, this is one of the loans that we were monitoring. She called me at the end of the January saying that she opened a new self-employed adventure, and she started to make money on that. A week later, she called me saying that she accepted the job from the Wells Fargo, and that is the W-2. And 3 days after that, she called me saying that no, she decided not to accept the job from Wells Fargo, and she continued with her self-employed adventure. Every time that she calls me, we have to recalculate for what options she would qualify from the lender. At the end of the results were the next. We apply for the loan modifications. This couple were still in the forbearance. We have to literally cancel the forbearance in order to apply for the loan modification. You cannot apply for 2 workouts at the same time at any lender site. New mortgage balance is $422,353. So practically all unpaid interest plus the escrow has been put into the mortgage. New interest rate reduced to 2.75%. New loan terms was 40 years. New LTV was 89%. This is actually one of the issues why she was not qualified to refinance. And new monthly mortgage payment was $1,938, which is saved $396.20. Total minimum savings over the term of the loan of the mortgage is $190,000. So these people will be paying $190,000 less in interest. This is one of the workouts. Yes.
Someone online said to lower their interest rates.
Mm-hmm.
Carrie said to lower their interest rate, is there any fee? Their fee, so in this model, they went from 3.75 to 2.75.
No, a lender doesn't charge any fee. If they, I didn't say anything. So they usually they forgive the late payments. It depends where the people accepted, where got into the hardship. Before forbearance, during forbearance, they would give you completely the list of the fees that they would charge, but normally I didn't see any fees for like for the mortgage. When you're buying the mortgage, I didn't see any fees like that. That is a modification of existing terms. A lot of people make a mistake when they receive a loan modification, they forgot that they have original note. So original note usually register at a county, but loan modifications normally do not register at the county recorded office. So practically you need to keep both. You need to keep original note, loan modification, because modification of this note. So a lot of people do not know that. I was getting the phone calls like, why it's not registered at the county? And I'm just like, what? So anyway, next example would be subject property has been purchased in 2018, very new, and this was single mother that she had some medical events that her doctor literally told her she has to stop working and take the treatment, otherwise she literally going to die. So her employer actually did everything, and I don't know why, that she wouldn't even receive unemployment. But bottom line, she didn't have income. She couldn't even have unemployment income. She had 2 kids. She had kids of 17 and 21 years old who started to work, one full-time, another part-time, so that they can bring some income at home, and they reside in the same properties with the mother. When they came to us, they actually forgot when mother bought the property that it used to be investor property. She never registered that at the county office as a homestead. This is why she could not do anything by herself to apply for modifications. Usually we get the cases that already something happened and we need to fix it for people. And so when we work with them, we, because she doesn't have the income, but modification allows to use household income. It's very important to know. Some people said, I don't have an income, but you have some other people who are not the borrowers, live in the property, and they contribute to the household. Loan modification department would accept this type of income as the income of the household and provide loan modification. This was one of the cases like that. This is why I brought it here. So she came 1 to 5 days prior to foreclosure sale. So it took us 48 hours to prepare the documents, register at the county, submit the documents. We waited 24 hours, and we received notification and from foreclosure attorneys and from the lender that the sale was postponed, and they're reviewing that for the loan modification. So practically our work is to help lender, foreclosure attorneys to make a decision, help them with the documents, because homeowners not always can put all the documents together. It's complicated for them. So this is what our work is about. For this particular case, if you look, it was total amount due was $200,000 and has been split as the following. New mortgage balance was $147,285.09 at 3.375%. And principal, its partial claim was of $53,470.48 at 0%. So she never going to pay the interest on this mortgage, and by only that, she already saves $54,150. So this is what the partial claim looks like. Okay. We are in the summer, and some people never been late with their mortgage payments on the first or on the second. But because they were taking them maybe 10 years ago, and some of them may, this particular case, that first mortgage was about $179,000 and second mortgage was $200,000. The value of the property was around $200,000. So the second mortgage lender, they stopped accepting the mortgage payment and requested to pay second mortgage in full. So practically us and the lender would not cooperate with these people. I have to tell you that these people are very sophisticated. They're making very good money. And so when they came to us, it was just like last resort. We did call the lender, even if they told us that they're not going to talk to us because they didn't want to do anything. Of course, lender said, like, it's a check mark. Call the lender, check mark, so next step. We contacted after we called the lender, we have opportunity, we create opportunity to contact the investor. Investor in this case was Mortgage Stanley, and the usual investor wouldn't talk to us, but as an opportunity to submit them offer, literally what happened, what we're offering, and how to settle that. So we were able to settle $200,000 at $45,000. They were open for settlement, for cash settlement. And so the people walk away, stay in the property, foreclosure was postponed, and so problem was resolved. Example of the note assumption and loan modification for survivor and heir. How many people heard the cases that somebody inherited the property from the father, from the mother, from the spouse, and they cannot afford these properties because they have different income. Even if we got sometimes cases from the attorney's office, then they did the loan modification. And according to the legal process at the bank, 6 months after final loan modification signed, you have to request assumption of the note. So put the new heir name on the note. But usually it never gets to that stage because as soon as final loan modification signed, next step is to take the mortgage payment from the new heir bank account. And here's a different social security, different name. And when it comes to the bank, it usually cancels because the note still has the old borrower's name, deceased borrower's name, and Social Security. So we were approaching this in a different way. In this particular way, there was a lot of equity in the property. So we came from the loan principal balance of $395 and property value was $570,000. Monthly mortgage payments was $995, almost $4,000. Not every lender would do this process assumption. So, but what they can do, they can sell this note to the lender who can do assumption process. This is how we approach Bank of America. They sold it to the Baby Loan Servicing, and Baby Loan Servicing were open to do loan modification assumption process. So they done this. They saved the borrower practically $1,250 on the principal and interest payments. The new payment with the property tax insurance was $2,750. And this was registered at the county office by the title company. So everything is possible. Now let's see how you can benefit from the foreclosure process and what's going on the market right now. Okay, this is how I see the market, just from my perspective. Don't quote me, please. But from what I see, people have the equity in the property, people who don't have the equity in the property, and people who recently bought the property, and it's not their fault if they didn't have, or they, they couldn't have the equity in the property, and they all have accepted forbearances. Okay. At a different stage of the foreclosure process, you can approach people to the how we're doing 134. I have another 15 minutes. So with a different stage on the foreclosure process, we were approaching lenders to do the short sale discount payoff without arm's length transaction. The program works next. There is exception for nonprofit organization, and I have Patricia Henrighty, who is Executive Vice President of the Home Liberty Company, that she's online. Hi, Pat. So she was the one in 2010 who convinced Fannie Mae and Freddie Mac to make this exception for the nonprofit organizations, and she worked that time at Boston nonprofit. And we created a program that helped us to approach the lender, buy the property at a discount payoff when it's eligible to nonprofit name, and have lease to own contract with the homeowners that only they can purchase this property back within 3 years when they reestablish themselves financially. So we are done this program since 2015. The fees for real estate agents is just regular fees as it in a short sale. We practically do all the work, and you just doing the purchase agreement, drafting the purchase agreement. Can it be done? I was thinking, can it be done for the people who just purchased the property a couple of years ago and got into the COVID? Because some of them, this property is distressed property. I'll be honest, we didn't have any workout completed because there's people just started to approaching us. But logically, every county has a discount for distressed properties, okay? So like 24%, 35%, 14% depends on the county. And if you use the discount, it's possible to approach the lender if they open to sell the property at the cash value. And if no other options available for this type of people, just want to let you know. And people would like to stay in the properties. So that is the workout, example of workout before any foreclosure sale. It's already completed. So borrower is going through the divorce, and it has been sent to us from the divorce attorney. This borrower had the property, it's a St. Louis Park property, primary residence, one mortgage with the balance over $689,000. First mortgage lender agreed on discount payoff, and they sold us at this property $325,000. When we did the Fannie Mae appraisal on this property, appraisal come back at $350,000. So $325,000 cash offer on this property was very acceptable for the lender. Immediate savings for borrower was over $305,000. Borrower down payment was $43,862. It came from the both divorce proceedings and help of your mother who lived in the property. A borrower down foreclosure has been suspended, and borrower continued to stay in the property. We have agreement, as I said, with the borrowers that only we can sell this property back only to them and nobody else. And this borrower was in the property for 2 years and 1 month. Practically, she graduated. She found a job as the principal of the school, and her mother died in those last 2 years, and she wanted to go to the smaller property. So real estate agent did following transaction in the same day. They purchased property from the nonprofit organization. They sold this property in another room, and they purchased a smaller property closer of her job. So this is so she walked away with after all expenses paid with $150,000. So from the time, and of course, real estate agent received all the proceeds that you normally receive. Redemption period. A lot of people, when I did presentation for real estate agents, they said like they never done negotiation for the short sale during the redemption period. We did do those negotiations when it's appropriate. So we had a case that people came to us of being already a couple weeks in the redemption period, and initially the mortgage was $771,000, but redemption price come up with the $425,000. When we did the appraisal, Fannie Mae appraisal come back at $365,000. We still could not finance this this loan, redeem this property, because we need to negotiate the price down. But fortunately, there was a documentation from the lender that proved that they put, like when you do the BPOs, they usually put the higher price and the lower price of the property. Of course, 425 was the higher price that they put for redemption period. So we asked to use the lower price, and they would agree to change the redemption price on this property. After redemption expired, we has been approached. They told us that we should work with the foreclosure attorney, so in order to purchase this property at the new price. So they sold this property at $350,000. And current estimated value of the property over at this point over 500, and the purchase price by the homeowner is the $411,292. When the people get on the program like this, we tell them on the day one in the agreement how much the property would be going to purchase this for. Doesn't matter for us how it's going to appreciate. If it's appreciating and they're maintaining the property, homeowners maintaining the properties, property appreciated, that is the homeowner's equity. So as far as they paid off the price of the property that was set day one on the agreement, it's okay with us. After redemption, there would be the cases that would not be qualified people for loan modification, and I'll give you the case that you would not be able to even sell the property. This particular simple property, it's a house from the mother and grandparents. This woman got into the car accident. She has a brain injury, and her husband died while she was going through recovery process from the heart attack. So she put the candle, and she actually, because she was on medication, she fell asleep, and she burned the living room in 2 levels. So lender could not approve, even insurance company sent the checks to repair the property. Lender cannot sign on those checks because the borrower was delayed with the payments. And until she current with the payments, nobody can sign to start repairs on the property, and they cannot do any loan modification or forbearance because they cannot do appraisal on the property. So it goes like catch whatever 22, and has been referred by the mortgage broker. She stayed in redemption during the redemption period. She come up with a down payment, and we approached the lender after the going to the court with the borrower and foreclosure attorneys. So we did do negotiation and close this property one day before the new year end. So it was very nice, but it was very challenging. So the person is still staying in the property, and the property, this particular property was estimated value of $320,000, and the principal balance was $180,000. We purchased this, which is $78,000 came from the insurance company. We negotiated that lender keeps those payments, and the rest of that, and we offer about I think $65,000, so about $147,000 was price of this property. We did sponsor the borrower with a construction loan so that we repaired the property and compliant with the St. Paul City Code, and the borrower still stays in the property. Borrower didn't have a lot of money, so whatever construction loan has been added to the purchase amount, and borrower can purchase this property around $192,000 from us. Do you guys, this is when you're talking to people with your borrowers, you know, if you cannot babysit the borrowers. First, that I would ask, and when people call, what are their goals? They would like to stay in the property if they can. They would like to, do they have a negative equity? Do they have an income now? If they don't have an income, who has the income in their household? Because sometimes you would have cases like this, they may not always be approved for the new mortgage. Depends where they accepted forbearance, and maybe you look for opportunity, see if we can do some short sales to keep them in the property, and so that you don't have to run around and look for the property or lose the client, you know, because you didn't have an option for them. So it could be different options like that. There is a federal coronavirus resources on the website, and I just put this like together. There's a website, and I have to tell you, what do you recommend to clients? Would you recommend, if it's very simple case, people can call the lenders and would even tell them what to do, but nobody charges for this kind of consultations. And so people can do this with help with ideas, with a plan, and so that they know what they're doing and what they're talking about. A lot of people cannot do it themselves because they work and they don't have time to be on the phone call more than lunch break. You know, and can you imagine how many homeowners call during their lunch break to their lenders? So practically everybody. So we have some people who comes to us and asking for assistance, so we're providing them that assistance. People can, if they were denied for the workout first time, depends on the loan modification or short sale, it's always an opportunity to appeal. There is a department, special department at every lender site. And when the people receiving a dispute denial letter, it's always how to dispute information for that lender on another side of this letter. We can use that to provide the dispute, but you need to provide details and your facts that probably have been overlooked or maybe missed. So in order to get results that you're looking for. Another option would be if that doesn't work and for some reason the lenders doesn't want to work with you, or you think it's still wrong, you can send complaint to the Consumer Protection Financial Bureau, and I did provide you the link. There is a very simple process that you can explain what is your complaint is about, and CFPB usually sends this information to the lender within the 15 days, and then they're actually they send in within the 48 hours of receiving, and lender should respond within the 15 days of receive this information. You also can request to postpone the sale if you think that lender's decision wasn't right while they reviewing the dispute. So there's options like that as well. Do you have questions? We actually, when we work with the homeowners, we guide them through the entire process. We start work with them, and until they get the final results, new agreements, this is where our end station is. If more than one person involved, like title companies, like vendors, real estate agents, and mortgage, name it. Sometimes there are 2 real estate title companies and 2 real estate agents. I usually coordinate all this process to make it simple for everybody, so there's no overlaps and people not stressed out. So that's very helpful. That's what we do. Do you have questions? I do have the all. We have support of the home liberty for us, very important, because Patricia Conradi handles all the investors, and she can. Do we have a couple minutes? So some investors are the small investors, and they have maybe $50,000, $100,000 on CDs, and they would like to earn a little bit more money on this programs, and some of them are the large foundations that they would like to support the homeowners in this type of workout. Yes.
So I would assume that if we have a past client that has an issue, we connect them with you first before they would get in contact with their mortgage lender servicer.
Yeah, I have to tell you, with the real estate agents there who I work with everybody who wants to work with me, right? So when you don't have time and you don't know, I don't know everything that you know. Okay, this is what the collaboration is for. So, but sometimes people will call and put on a Zoom or on a conference call with the phone to answer the question. Sometimes you already know the answer. Sometimes we just schedule another Zoom and I'll work with the client and give you updates what they would be qualifying for. And then it's would be educated decision for the client and for you, what to do. I have to tell you, people must be prepared. Sometimes for this workout, you need to be prepared 2, 3, 4 months in advance, okay? And because of the moratoriums, right? And the foreclosure process, redemption periods, and etc., that is possible to be prepared for use maybe from 3 to 6, 7, 9 months of preparation and still stay in the property.
So what phone number should we give to our clients?
This is our information. We are the tool in your toolbox. We're located at the Tobak office. Otherwise, I will email it. The phone number is 612-922-4266. Yep. And we're located in the park office, so very nice community.
You should. So
Yeah, I will give it to Katie so that you guys have it. So you can't remember everything. There's no. It's 11 years to fly. We usually we cannot advertise. We never advertise our services because people who are in a hardship, what are they doing? They are in denial. They are not answering the phone calls. They are not reading the email, but they do call people who they know. And this is why we practically build our services. I am in part of the different networks and chamber, North Chamber, and in networks and BNIs and etc. So that practically, if somebody knows somebody who needs the help, they can always reach us, and we can answer the phone calls and see what we can provide, what kind of service we can provide. Do you have questions? Okay. Is it helpful?
fantastic. Yeah.
Is it any other questions that I didn't answer? I should send you some information.
Colleen shared in our meeting a couple weeks ago, her client had called her in tears and said, they're gonna propose. They want the full payment of the forbearance. We can't do it. They're gonna foreclose. And then you help them.
Yeah, I'm still working with a client. So this is what's going on, which is very strange. Usually in the state of Minnesota, you have to be served with the foreclosure. Here's the lender sends a letter to this client saying your foreclosure proceeding starts like June 22. And after that, okay, your foreclosure proceeding starts July 23. Okay, August 8, I called them, I said, like, what foreclosure proceedings? I mean, guys, you even didn't serve these people. You even didn't send the notice of default. And they couldn't answer me. They even couldn't say, explain why they send in these letters. So it's not legitimate letters that's sent by the lenders, and people panicking. So
Well, good they have.
yeah. Okay, guys. Thank you.
One of the things that I would like to emphasize right now,
Thank you, guys. Do you have questions?
I don't even know enough to ask this question,
you know,
but it's very good. It will help to look at.
I do have a
Thank you.
question.
You're welcome,
Thank
guys.
you very much.
you know,
Great.
Hi, are you able to hear me?
yes.
Oh, yay. Okay. So, I was wondering on that one house, I was really curious as to why there was such a disparity. But it was that
The speaker doesn't work. How do I? Are you on mute?
But she
No.
might not be able, might not be
No,
connected.
I can hear it.
One moment, everyone,
one moment.
Can you call me?
Oh, sure.
Here, you can use my laptop.
612
Okay.
There we go.
702 1140.
Okay.
I'll go grab the phone. Just a
Might be
second.
able to hear.
Oh, can
Yeah,
you
I
hear?
have her on here.
Can anybody hear me?
Oh, now we can hear you. I don't know.
You can hear?
Yeah.
Yes.
Okay. I'm Pat Hanratty. I'm the managing director of Home Liberty, which is the funding, the financial niche funding specialist for helping people get out of or prevent foreclosure. And
Right.
I think one of the most important things for everybody to understand right now is that the market is in total flux. Nobody really knows, not the institutions, not the federal government, not private lenders, what's going on, for how long it will be going on. I'm sure you've read all of the information in the papers about people who are wondering whether or not they're going to be foreclosed upon. As Ina said, how long is the moratorium going to last? I mean, nobody knows answers to any of this, right? At the same time, we appear to have incredibly hot real estate markets with low inventory and considerably higher prices than,
Right.
than we've had in a good number of years. So that's a real challenge. And one of the biggest and most important things is to evaluate with your clients what their options are in terms of resale, et cetera, because if they have a lot of equity in that property because of the recent escalation of prices,
Oh, I
the
can.
banks, we don't know what the banks are going to do or how they're going to respond.
Oh, got it.
Right.
So-
Right. I'm gonna give her a call real quick.
She's on mute. Can you see that?
No, I can hear you now.
You
Oh,
can
okay.
hear?
Yes, yes.
Oh, awesome. Okay, because I just called you and it went straight to your voicemail. That's all good. It's all good. I was just wondering on that
My
one
computer?
example,
Oh, this.
and this is super helpful, so thank you. I was just curious with that one example that was like over $700,000 and the appraisal was like 300 and some. Was it just where that property was maybe purchased in 2007 and it
Yes.
plummeted in value?
Yes.
Okay.
Yeah.
Okay.
That was the 2007, 8, 9 crash on
Yeah.
values where
Yeah.
it was not unusual to see properties drop by 30, 40, 50%.
Sure.
So that's what happened. It was also, it was in a wonderful neighborhood. It was in St. Louis Park, but everything
Wow.
fell off the cliff.
Sure.
And one of the big questions right now is that going to happen again?
That is the biggest question. People are going, oh, I'm going to wait to buy when it's going to crash and everybody's going to go into foreclosure and everybody's, that's,
Right.
that I guess is my
Right.
biggest question.
But what we do know is that there are literally millions upon millions of people who haven't made mortgage payments in a substantial period of time and who have been dependent upon the foreclosure moratorium. And that is up in the air as well. I mean, as I'm sure you've seen, many of the banks and other investors are trying to get some sanity into the moratorium so that it's not, okay, all of the renters and homeowners are fine, but all of the investors go down the tubes.
Right.
So, that's one of the big questions is how is it going to work? And a key to that will be the values. If the values, I don't, I never try to predict the market because it seems to be quite futile, and it's about the only thing you can guarantee is that you'll be wrong. But
Right.
It is hard to understand how it is the inventory can suddenly grow and the high price values be maintained. So
Yeah. No, for sure. Well, what was interesting to me, and is it Ina? Am I saying that
Ina.
right? Ina. Okay. What was interesting to me is like, it seemed to me from your examples, people were almost better off going into forbearance. And I'm like I'm wondering if people in normal situations are going, well, screw this, man. I'm gonna figure out the forbearance. I mean, I literally was amazed at the amount of money they saved.
Well, the truth is that the home, I mean, the mortgage market has always been somewhat of an outlier in terms of it's mixed, not just with finances and rates and all of that, but with enormous emotion. People have enormous attachment, many of them, to their homes. For
Right.
some, it's been a homestead for years. For others, it's passed down from family. For others, it's been a dream that they finally were able to secure. So it gets very, very difficult when people are dealing with that. Ina talked a lot about the fact that people try to get into avoidance, and they really do. I mean,
Right.
I've seen situations where husbands didn't tell wives that they hadn't paid the mortgage in a year. I've seen other ones where wives didn't tell husbands that, they had been paying the mortgage, but none of the credit cards were paid down, or they were borrowing from the credit cards in order to pay the mortgage. So when you actually are going through, not, not right now, because right now it's been enormously consumer friendly in terms of the moratorium and what, but it will go back to a situation where legal proceedings and foreclosures will occur. And when that happens, the stress that, and Ina can speak to this as well, the stress on the homeowner is enormous.
No, that's
and
horrible.
it has a physical effect, a mental effect, obviously a financial effect. Their kids, I mean, we've had situations where, banks have or not banks, but collectors have called and gotten a kid on the phone and started screaming at kids and saying, you're gonna get thrown out of that house, blah, blah, blah. So
that's awful.
It's very, very, very difficult. And during the big crisis in 7 to 10 or 11, we had suicides. We saw suicides, we saw, sheriffs getting shot, because people were so upset. So it's very unusual in my experience, and I've been doing this for, unfortunately, about 11 years. It's very unusual to see people who simply do a financial calculation and say, yeah, I'll put up with all of the BS for 2, 3, 4, 5 years, people knocking on my door, getting all this mail, people doing drive-bys on my house. I think maybe I've seen one where they made that financial calculation, and we can weed them out pretty quickly.
So and I'm sorry, Ina, if you may have said this and I missed it, and you had so much good information. It was awesome. It really was.
Welcome.
So, but does going into forbearance put a ding on your record?
Oh, yeah.
It depends if it was the COVID, if they accepted forbearance like in February, March 2020, they should not even report. If they were on time before that, before they accepted forbearance, they should not report to the credit bureaus that it's late payments. But the mortgage, if they would like refinance or something or get a new mortgage, underwriter would require them to make the payments on the current mortgage for the 2 months. Then they can qualify them for the new mortgage. Not every underwriter would do that. We had cases that they didn't. But I have to tell you that if you were late before forbearance acceptance, then it goes on a credit report as you were late.
Sure. No, that
and-
makes sense.
And I think, is it Jelana? How do you say your name?
Jelena
Jelena.
was on there before. Yeah.
Okay, thank you. But one of the big things that's one of the big things we just don't know, because there, while it's a COVID event, and at some point they're gonna make some ridiculous decision about COVID started and ended at particular times, which we know
Right.
unfortunately is not the case.
Right.
Excuse me, but they're gonna come up with something that says, okay, during this period of time, we're not gonna count it in some fashion.
Right.
And then, but we don't really know what that is yet. We don't know whether it's gonna be, they're gonna do it right away. They're gonna say, okay, if you took advantage of the interest-free extension where, they tack it on to the back of the loan, that's okay. I really do believe it's too up in the air and too confusing for us to pretend to provide definitive answers. And if you hear a strange noise, that's my dog snoring. So,
Oh my gosh, your dog is so dang cute. I sent you a
cute?
message. I'm like, Pat, your dog is darling.
That's her. That's my little girl.
Oh my gosh, so cute. Oh, so cute.
The problem is that it's been
Oh.
thundering and lightning and pouring here. And
Is
she
it?
hates, yeah, and she,
Oh, it's
she's
like 4th of July, right? When all the
Right,
fireworks
exactly.
are going off.
exactly.
Oh my gosh. So you guys obviously work together.
Yes,
Okay.
not
wow,
on
you're a
every,
good team.
not on every case, there are people
Cases,
that
you know.
approach me and have very different situations where I can just buy the property for 2 or 3 months and then sell it back to them, and they don't need to get involved with Ina. But most of the clients come because they've had a relationship with Ina
Yeah.
in terms of foreclosure counseling.
Well, golly, you guys, thank you so much.
Thank you.
Really, really good, because we hear it a ton, but it's like, okay, really, what is it? So that was super helpful.
I just want to tell you that comparing 2008, 2009, at least we're already familiar and we have some
Right.
tools that we can use.
Yep.
Right.
That's a difference.
Yeah. Well, you guys, thank you so much. Really
Thank you.
appreciate it.
Thank you.
Thank you, Pat.
Take
All
care.
right.
Thanks, Ina. Bye-bye.
Take care. Bye-bye.